待たせをいたしました。改めまして、ブロックチェーンの健全な発展と新しいビジネス創造のためにご視聴賜りまして、誠にありがとうございます。
The program once again on blockchain for business and beyond, laying the foundations for healthy growth. We'd like to start the session on trade finance and blockchain technology.
こちらのセッションの進行は三井住友銀行
The session will be moderated by Mr. Hiroyasu Ono, Head of Trade Innovation Asia, Global Trade Finance Department of Sumitomo Mitsui Bank. So I hand over the floor to you, Mr. Ono. Thank you very much for your participation. I'm from the Mitsui Sumitomo Bank. I'm Head of Trade Innovation Asia. I'd like to thank you for taking time out of your busy schedule. This is about the enterprise blockchain technology leveraging in the business area. And we'd like to ask Mr. Hirofumi Aihara from Accenture to talk about the enterprise blockchain. And Mr. Hasegawa next will be speaking, followed by Mr. Barnes from Trade IX and Mr. Carl Wegner from Contour. From London and Singapore, we have remote participation by some of the speakers aside from Tokyo. So first, from Accenture, we'd like to have Mr. Hirofumi Aihara, Managing Director of Accenture. He has worked in a large bank for 29 years, risk management, IT planning, regional system integration manager was his responsible for from 2020 June. He is working for Accenture and is working on technology innovation post-corona attempts at business using technology. That is what he will be speaking on. So over to you, sir. Those of you in the hall and those of you participating online, I'd like to welcome you. I'm Managing Director of Accenture Japan. My name is Hirofumi Aihara. Torrential rain and corona. I'd like to express my sympathies to those that have been impacted and to those of you in the medical field who are struggling to fight the coronavirus. I'd like to express my due respects. I'd like to talk about blockchain using trade. And before the COVID corona happened, I had a talk about this. So I had original plans to focus on blockchain. But going forward, we have to learn to live with corona, and we have to be mindful of post-corona. So in such an age, people in business, I hope, would broaden this to think about digital, how to think about the digital world in addition to the blockchain. So I'd like to talk about approaches in the digital area and how that feeds into blockchain. I'd like to talk about that. This will be a relay presentation. So I hope to trigger some discussion by starting on these topics. Accenture every year publishes a tech vision. It comes out from November to January in the next year. From July of 2019, over 6,000 business managers in different countries we have interviewed, and we interviewed some experts, and we discussed the digital and technology trends and how that looks from the standpoint of business management. We did some surveys on that on the 5th of August. Normally, we announce this in February, but taking into consideration COVID-19, we thought about how we should update it, and so we came up with an updated version. In 2020, we believe that the post-digital era would have arrived by then, and so the business people are leveraging technology? In what way will they formulate the management strategy? That is what I'd like to talk about first. In the screen in front of you, I've put up some numbers. On the very left, it says 50%. That is worldwide. 4.5 billion. Over 50%. That is people of different countries are indeed using the web. So we're in that kind of an age. In the developing countries, a little while ago, there were those who found it difficult to access the internet in terms of environment. But we've achieved this percentage. So this is the kind of times that we live in. For those that are connected to the web, during 1 hour, to what extent do they use the internet? That was announced in 2019. It says 6.4 hours. That's 6.4 hours a day that people are on the internet. During the day, 6 hours and 40 minutes, people are immersed in the virtual world. That's 1/4 of the people's lives are spent on the internet. And there are statistics from different countries, but in the case of Japan, it's 3 hours and 45 minutes. So digitalization still will grow going forward. And the next number is where we did questionnaires on different people. About 2,000 people were interviewed. Technology is inseparable in people's lives. The 52% said that technology was inseparable in their lives. And then 20% said that they could not live without it. It's a necessity. So what kind of things should we be thinking about in such times? And we come up with themes every year. Until last year, we were talking about the post-digital area, blockchain, AI, and virtual reality. And we've asked whether people were prepared for all of this. And this year, technology businesses, technology CEO, we asked whether people were prepared to become technology CEOs. And as to the reason why, as I mentioned before, most probably, without technology, corporate strategy and corporate service and business will no longer be viable. So in such times, creating systems or writing programs, I'm not talking about the technology CEO in that respect, in that regard. I'm talking about the specific characteristic of each technology. These have to be well understood, and how that is to be leveraged in business. CEOs will have to be able to make judgments in this regard, and companies have to educate and nurture these CEOs. Business management in the future will have to be conducted from that standpoint. And this is what the point we're making. And as is written here, in particular, there are specific themes. Until last year, we talked about using technology. We talked about personalizing services for customers, or using tapping AI, or security. These are things we talked about. This year, we talked about people within their experience. And then I talked about AI and smart singles. And the other two must be familiar to you. So I'd like to talk about these three. So first, me, in my experience, what I'm talking about here is that traditionally people try to understand customers' behavior. They took data. For example, financial institutions would look at things other than financial transaction data related to customers' lives, or if they want to find out what people bought and what the environment was. An attempt was made to understand the customer, and these were areas of extreme focus. But going forward, what is happening is that, and there's some of that here in Japan already. Now, for each individual customer to have them participate in the creation of service and products. Customer participation and presenting that experience so that they can become immersed. AR, VR, using this, and we give customer different experiences. And we believe that there'll be progress in this area. There's an example here. A certain US media company, a large media company, have customers are participating in choosing the next story or creating the plot for the next story. YouTube and other companies are introducing participation type stories. And then, for example, more recently, restaurants use AI. And for example, as to what I like and what my allergies are. When I give them this information, automatically they would choose the optimal menu for me, and then they would present it to restaurants. So the focus is on individuals to provide customized services. So customers are participating in actual manufacturing of goods and products. And in addition, AI and me, that's another theme. This is our own unique survey result. We asked the management of different companies about AI. In the past, I have been responsible for digital sector, and AI was talked about as substituting people's work, that's RPA, and then after that, AI came into areas where people make judgments. Simple judgments could be left to AI. For example, AI is answering people's inquiries. These were what people had in mind.
Looking at the recent trends, I see that we are in an era of more collaboration between human and machines. We're not trying to personalize machines or give character to machines, but as you can see in the examples on the right, we have what we call generative design. So a human input design requirements, and automatically the machine outputs a design document. So there is such technology already available in the world. Furthermore, we add AI to this, and this is an initiative by an automotive company. It is tasked with actual design of automotive parts. First, the AI does the design, and humans reviews the output and makes improvements where necessary. So this kind of design process is already being generated. And another parts manufacturer, they've decided to adopt AI for all of their products. Of course, they will make sure that the decision-making using AI will constantly be monitored by human eyes. So these are some examples. Our company also works with the client companies in creating operations. We have business processes that combine AI and human manual work in order to provide services. And lastly, I want to talk about this dilemma of smart things. What we call smart products, for example, speakers with AI on board, and this iPhone as well, they automatically update itself. They autonomously make decisions to take action or to provide services. They update on their own. They will not become final products. What happens is that the software is constantly updated or upgraded, and eventually hardware is no longer able to keep up. Therefore, it needs to be replaced, and this creates a multitude of problems. So how to mitigate such a problem is one thing to think about. One mobile phone with OS upgrade, it starts to consume more battery. That's just another example. In order to address these issues, for instance, this manufacturer of robot vacuum cleaners, they put this kind of data onto the cloud. The cleaning data of their customers is stored on cloud. So whenever the hardware is replaced, the AI can learn from that data on cloud. So this provides a seamless service transition. When we think about products in the future, this kind of concept becomes crucial. And lastly, I want to briefly touch upon this. Finally, robots, especially under the current COVID pandemic, are becoming more important because it is creating areas where humans cannot enter or touch directly. In these areas, robots are being used. So a culture building is going to be important going forward. As I said just now, it all comes down to data. So how to handle data is going to be critical. This refers to individual consumer and security for them, whether data that they present is accurate or correct or not. These are questions that they may have. We believe, and we often say that blockchain is one type of data system. In the past, looking at the recent trends, we have a POC projects related to blockchain happening all over the world in thousands. And finally, since blockchain is just a data system, we have a variety of technologies surrounding blockchain. Through combination with those technologies, the multi-parties develop an ecosystem and create services. And databases serve as core for such model. I think that's what we are seeing today. It is not a hype. It's already being introduced. I will explain some examples of this later. So since I argue that this is a database system, what is different from traditional database systems? One difference is that multiple entities use this together, and the uniqueness of data is ensured. That is enabled by blockchain technology. In addition, a shared state is possible. It's not just the data per se, but the current state of things. For example, balance of coins, I receive 100 yen of coins, and my balance altogether is 1,000. That kind of state of things can be shared. That environment is then built, and it also provides information as to who the owner is. We believe that's what blockchain technology can provide. In the past, we had messaging that was done to enable this. Today, using this kind of mechanism, what we call identity, what authenticates me and myself, I think the technology can be used in this area. This is an international initiative, ID 2020. This is a digital ID. We are trying to promote this digital ID in a variety of developing countries. Furthermore, smart tickets, this has already been commercialized in several instances. People can use mobile apps to purchase tickets to concerts, theaters, sporting events, and others. And this enables users to enter these events without any paper. This also prevents scalping. And some companies have already come up with a platform for trading these smart tickets. This is a joke, but for example, masks can be, facial masks can be created on blockchain with QR codes attached so that they may not be resold at expensive prices. And another application is traceability. On the left-hand side, I show a traceability of food products. For example, mangoes produced in Mexico are sold in supermarkets in the U.S. And large supermarket chains in the U.S. Attach QR codes to those mangoes to allow traceability. And using the blockchain, it shows the flow of the product until it arrives at the supermarket. Especially in the area of trade, blockchain, I think, has high affinity. So these are some applications that are quite promising. Another example is this technology being used for trading power. This has made into a platform. In overseas, there are power producers who sell power generated to other users. In this example, this platform is used. Using the same platform, we can also trade CO2 emission rights. So how popularized is blockchain actually? This is issued by central banks, the CBDC. People from central banks in various countries have been doing research on this. And using this map, we are showing how spread this is. As you can see, a number of countries have already taken this initiative. Particularly, the reliability of currencies are not high in some countries, and that's exactly where we see this kind of project being actively undertaken. And going now into COVID-19 topic. Under the COVID pandemic, there are companies that we consider winners, companies that have been able to generate more user access. So capturing this kind of trend, I believe, is important. So then, how society is going to change? Well, everything is done remotely, or groups are connected online for chatting, and also elections. Use of AI in drug discovery is another trend we are seeing. With COVID-19, I believe these efforts have been accelerated. So when we try these things, being remote, being distributed is key. So in this trend, of course, many of the services have been provided online. Things are done remotely and in a distributed way.
And in this process, how data can be shared by those that have been distributed data, and how they protect data to ensure safety. To realize that, blockchain becomes extremely important. Blockchain leveraging digital ID, or on the internet, if you trade and engage in transactions, there's a the security will have to be ensured to prevent fraud. So highly credible environment, protecting data is important, and that will increase the demand for blockchain. And lastly, I've written here, blockchain alone will not do the task. So how we create the ecosystem to collaborate would be very important. And outside the blockchain, there are different technologies which will have to be combined to present a multiple platform. I think that will become important. And that is about all from me. Thank you very much for your kind attention. Thank you very much, Mr. Aihara. Collaboration between AI and people and the impact of COVID-19. And lastly, you mentioned the ecosystem, creating that outside of blockchain. That was a big theme. And it will feed into our next discussion. So thank you very much indeed. From here, digitalization in trade, blockchain technology leveraging platform approaches. This will be the subject of our session from now on. The second speaker is my boss, From Sumitomo Mitsui Bank, we have Mr. Masakazu Hasegawa, Managing Director and Senior General Manager of Global Trade Finance. In trade finance, he has 20 years of experience working with emerging countries. From 2017, he became head of trade finance and the center of trade finance in London. That is where he is. And he'll be talking about digital transformation in trade. So are you ready, Mr. Hasegawa? Over to you, sir. Good afternoon, ladies and gentlemen. My name is Hasegawa from SMBC. I look forward to participating in this session. In such a forum to talk about international finance, which is my expertise. I've had several experiences in the past, but an ordinary employee of a bank after age 55 to walk into the world of fintech and blockchain is something that I really did not imagine, even in my dreams. Fortunately, the young people in my company teach me from A to Z, and I believe I'm causing a lot of trouble for them. But every day I'm very excited to work on this new theme. And in this way, I was a total layman, but having done this for 2 years, I feel that going forward, in order to grow business, we have to know this field of study and area. Otherwise, we will be left behind and marginalized. There's a sense of crisis. At the same time, the experience that my generation has, or the business that we took for granted, will further bloom through the use of this technology. And I hope to convey this interest that I have in these aspects. From my office in London, I'm participating in this event. And why is a general manager of trade from a Japanese bank in London? You might wonder. Since 100 years ago, over 100 years ago, this was the center of trade information, and there's a gathering of people and information here. SMBC, since 10 years ago, has headquartered its trade finance functions in London. And we liaise with 127 overseas banks, and in 40 countries, we deal in LCs, short-term LEs of 1 month or over 15 years. Institutional finance is what we do as well, ECA, and various financial services is what we provide. And with the backing of the UK government, who's afraid of the UK declining as a result of Brexit, London is the focus of much attention from the fintech standpoint as well. So merging fintech and trade finance, new technology is generated from this location, one after another. I'd like to talk about first what trade finance is. For example, imagine a case where an automobile is exported to Africa, and the business talks may be concluded. But from this point, the vehicle has to be transported to Africa, transferred to a truck, and finally it arrives. It's displayed at the dealer's site, and finally it's sold. During this time, how many months have lapsed? And when will the seller be able to collect his money? And can he have any certainty that the money will be paid? If it's an emerging country that's involved, there may be economic crisis, political changes, corona, different things happen. And in this way, in trade finance, there are gaps in finance. And using different mechanisms of finance, banks cooperate with the Japanese exporting companies and the importer on the destination, and work to facilitate the early collection of the money and risk hedging, and provide solutions. And that's what trade finance is about. On this page, let me talk about the external environment which surrounds digitalization of business. Individual and retail digitalization, which is represented by people going cashless with the spread of smartphones, have progressed. On the other hand, in the corporate area, when it comes to digitalization, because there are workflows which have been continued for a long time, and organizations serve to block the penetration of this. In the corporate area, there are reasons why digitalization does not progress. There are two reasons. One is information security. With the blockchain, information security issue has been resolved. But when people talk about blockchain, they associate that with bitcoins, and that was an impediment to penetration. Because of COVID, there has been a drastic change in business activities. Teleworking spread, and so people understood that people do not have to meet people or go to work on a non-face-to-face basis. They can conduct market operations and work process. And naturally, there has been an intensified interest in blockchain. Blockchain targeted at the corporate sector is called enterprise blockchain. In 2020, we can call this year the inauguration year of enterprise blockchain, perhaps. At SMBC, in the corporate sector, blockchain technology would be most effective in the area of trade finance. And the reason is as follows. I talked about trade exporting automobiles. As the first figure shows, trade transaction involves manufacturers, trading companies, banks, shipping companies, storage companies, truck and other logistics companies, and marine insurance and customs. For one transaction to transpire, there are very many parties involved. And between the parties, there's a lot of paper which is exchanged. Copies are no good. It has to be the original. And in a line with the process of transaction, it has to be presented in order using courier. It's exchanged, and all work is manual, and it has to be scrutinized. And finally, after it is confirmed that the papers and the contracts match in terms of substance, then the item is transferred. And it's very effective in transacting with partners that you can't see, who are located overseas. It's effective, but it's very inefficient. Blockchain attempts to drastically change the inefficiencies in trade transaction, which continued for 100 years. It has that potential. As on the lower right, securing security using blockchain to realize paperless work, so that between the parties, whereas in the past documents were rotated through electronic technology on a real-time basis, papers are shared between all parties, and its reconciliation is also done, and it's drastically efficient. Our partner, a platform company, Contour, says that what took 5 to 10 working days before can now be done in 24 hours. So I've talked about the use of technology and digitalization of trade transaction. And some people may feel that this is just about admin and clerical work and efficiencies in this area. SMBC is not stopping at making more administrative and clerical work efficient. We feel that this creates business opportunities, and I'll tell you why. Look at the pie chart. This is the world's trade handling value. In total, it's approximately 2,000 trillion yen. It's such a large number, we can't really imagine what this means. If you add the yellow part and the gray part, 30% in some form or other has a financing from bank in some form or other. The dark green part, that is a 70%, has no financing.
So these are small values or transactions with short-term payments. Since the procedures are inefficient, they are not in scope for bank financing. With the advent of blockchain technology, and the procedures becoming more efficient, these transactions, in other words, the remaining 70%, can now be afforded financing. With bank finance, the commercial distribution of large companies are further expanded. And in addition, the trade by SMEs will also be in scope, and this presents new opportunities for opening new business channels. The blockchain drives a trade transformation, expanding business opportunities, and ultimately it contributes to invigorating global trade. SMBC follows the market trends as well as customer developments. And at times, we choose the platform that we consider optimal. And through creation, we build our own ecosystem. Specifically, it's shown here on the slide. The first is centered on Marco Polo. This is to digitalize open account transactions that do not use letter of credits with high prospects and more room for further development. More specifically, this refers to receivables, securitization, payment guarantees, and what is called supply chain finance. The second area is this. This looks at the existing LC transactions and Contour that digitalize all these transactions is used to respond to the needs of trade companies, for example, that handle a large number of LCs on a daily basis. The third is in trade financing, the number of transactions and volume tends to be large for a commodity, including crude oil and metal. And the third area targets traders of commodities in this industry-specific platform called Comgo. Through the three platforms, we can cover LC transactions to non-LC transactions to include various business sectors and transactions related to trade finance. Our aim is to build a structure that covers all of this in the digitalized way from end to end. Our initiatives have been featured in an article in Nikkei Shimbun newspaper. And this slide introduces major platforms related to trade. These are notable platforms, leading platforms in trade finance and digitalization. But besides this list, there are many developers who are entering this space. And the operating system in PCs and smartphones is equivalent to the core systems in blockchain technologies. We have Coldar, Hyperledger, and Ethereum. These are the three big core systems of blockchain. SMBC is part of Marco Polo and Contour. These platforms use Corda, a blockchain technology developed by R3. Marco Polo and Contour will be explained by the actual persons who are responsible for these later on. Lastly, in order to further promote blockchain technologies and digitalizations in trade area, we need to address certain issues. And so I would like to talk about these issues and the outlook. The key word here is interconnectivity. For trade transactions to be digitalized from start to end, we need interconnectedness in two areas. First is referring to the core systems of various platforms that are being developed. For example, Corda, Hyperledger, Ethereum. These big three systems need to be interconnected. Simply put, even if the OS is different in the world of smartphones, iPhones and Android users can be connected to one another. We need the same mechanism applied here. The second refers to the main parties to the trade. In other words, banks, shipping companies, customs, and insurance companies. They have platforms that have been developed specifically for their business area. These platforms need to be connected as well. In order to address these issues, the Authority on Trade Transaction Rule, the International Chamber of Commerce, or ICC, is playing a central role in a project called Digital Standard Initiative, or DSI, with the purpose of increasing interoperability among platforms and different blockchain networks. We will continue to closely follow the developments of DSI, and at the same time, SMBC will take active part in this initiative to display leadership in further commercializing and promoting trade finance digitalization. That is all for the initiatives of SMBC to digitalize the trade area. We will continue to work with the government to develop enterprise blockchain to increase efficiency in business operations, and together with you, we hope to capture new business opportunities in the future. Thank you very much for your attention. Thank you, Mr. Hasegawa. As Mr. Hasegawa explained, 70% is currently untapped in the world of trade. So how financial institutions can provide solutions to that huge space is the issue in front of us. We will continue to work to explore business opportunities. So the next speaker, I would like to invite the next speaker. As Hasegawa explained, Trader IX that develops the Marco Polo. We have the next speaker, CEO and co-founder, Mr. Robert Barnes. In 2002, he led the company and founded Prime Revenue, and supply chain finance and trade finance is his area of expertise. He's also founded consulting companies in this area. 2016, he founded the company Trader X. So today, he's going to talk about the project of the company on Marco Polo.
Mr. Barnes, I guess you're on mute.
Sorry. Good morning, everybody. I hope everybody can hear me now. What I would like to do this morning is I'm going to go through, or this evening, I should say, I'm going to go through the current status and future vision as we see it today, which really supports the comments of the two previous speakers. And then I will go through a little bit about Marco Polo, some use cases, and hopefully give a good understanding of how we're progressing with Marco Polo and with the various banks that are involved in Marco Polo, including SMBC. My first thing is to look at the industry challenges. And industry challenges, we really have worked very hard with our banking community to understand the challenges that corporate treasurers have. And a lot of them come down to, three major themes. And again, this is obviously being completely amplified with the events surrounding COVID-19. One is that they've got to be in a position to sort of cut costs. And cutting costs means basically doing more with less. Second thing they must really look at doing is how can the corporate treasury support the compliance? How can they actually be more compliant? Is this not an external issue? It's also internal. It's also making sure that they're complying with the policies that they have in the things such as working with their ecosystems of customers and suppliers in such a way that they're driving sustainability, inclusiveness, and also corporate governance issues. And then, of course, the most important thing is they need to support the company's growth in revenue. So this is quite a challenge if you think about it. You've got costs that need to be cut. You've got increased costs by making sure that you are delivering an infrastructure which really supports the corporate compliance issues and also external regulatory compliance issues as well. To do this, we believe that technology is absolutely the answer to this. It allows everybody to do more with less. And in fact, we're starting to see that as people have worked remotely over the last 6 months with the advent of COVID-19. To do this, we see a couple of things or a number of very big keys that actually do amplify and give the opportunity to make sure that this is a reality. One is there needs to be an ecosystem of connectivity, and that connectivity cannot be a connectivity which takes a lot of cost, a lot of time, and a lot of IT resources to achieve. It needs to be done in a way that's very simple to onboard into a network and have an expansive view in a private and permissioned way to all participants, external participants that a corporate would work with as they work through their purchase to pay and order to cash cycles. The way that we need to deliver this ecosystem is through automation, making sure that as many of the processes as possible can be automated and executed off defined contracts and workflows. The third is we need to look at better access and use of data. There's a lot of data out there, but it tends to be very, very siloed. And therefore, being able to, if you'd like to bring this data together and use it in ways which actually help drive things like compliance, understanding customer behavior, making sure that you're providing the right reports at the right time efficiently through automation of the actual data that's in use is really important. And a key to all of this, and in fact, none of the above can really happen without digitization. Getting away from paper, getting away from a PDF that has to go through an OCR scan and then be imported by a third party is really, it's costly, it's it's fraught with mistakes, and is not efficient and doesn't work. So moving to a fully digitized process is absolutely imperative. And these are the challenges that can be met through technology. So if we look at the outlook and the main challenges that both banks and corporates have, we actually took 6 outputs from a Deloitte industry study that they did. And some of these apply to banks, and some apply to corporates, and some apply to everybody. We looked at things such as looking at customer centricity. We looked at, in other words, where is the customer? And a customer, quite frankly, can be an internal customer. It could be Treasury looking after subsidiaries and their customers being the procurement organization, the sales organization, etc., and making sure that things are aligned through the organization to basically manage their days payable outstanding and obviously their days sales outstanding. Regulatory collaboration, as I said before, that is both internal and external, and being able to provide the visibility and transparency to meet the requirements of the corporate and the bank is very, very important. Making sure that the technology can be managed in such a way that we don't go through a very expensive exercise of keeping everything in-house, on premises, having to maintain a very large IT organization that is somewhat supported by expensive third-party help. Being in a position that you can move in a very agile and flexible way through technology management is an absolute key to supporting the transition to a digital environment. Maintaining and mitigating the cyber risk is really important. So being in a position where you are communicating, you are transparent, and you have all of this, somewhat needs to be considered in the environment of cyber risk, and that is a real key. Working with and understanding how fintechs and big techs can actually support the whole move to a digital, integrated, more transparent, more connected environment is absolutely key. No one can do this alone, not even fintechs. We all collaborate with various partners. It's really important that we find the right partners to actually work with to achieve the objectives. And then, of course, the last one, which is really important, is reimagining the workforce. The way in which people work today is going to be different to the way in which they work tomorrow. And nothing has amplified this more than the events of COVID-19. So again, as I said before, the four key areas that we actually call out, we believe in part of the Marco network, is really how do we get customer centricity? How do we get channels that can actually interoperate with one another, where the information flowing between the channels is in such a way that it's what I see is what you see is what I see. There is absolute provenance of data. There is absolute trust in the information that's being produced. We also have to get into a situation where we're not obsessed with a product and sales focus. What we're obsessed with is how does the information flow through the organization so that we can generate better outcomes for our sales and various products that we're delivering to our customers and suppliers in which we work with. In other words, reversing the focus. The target, the right markets, what are the right segments? Where do I start with this digitization process? Where can I get the most value to begin with? And how can it impact the customers that I'm working with? And again, from a bank, this is their customers that they work with. From a corporate, it's your customers you work with and your internal customers. And I emphasize internal customers, because giving better tools and better flows and better ways in which they can work actually leads to the cost reductions and efficiency improvements that we were talking about before. If we look at the regulatory collaboration, this is really important. There are complex business models today: anti-money laundering, KYC, know your customer, regulatory reports that need to be done. Making sure that the underlying transaction was really a transaction that did occur and that was transported, making sure that shipments did not go through any sanctioned country on the way. There's just so many things that need to be actually addressed in a complex way of providing the information to regulators to ensure that the business is done in a way that's incredibly transparent. Plus, there are new rules. For example, in Europe, we have PSD2, which is the interface between the banks and an open banking network to corporates. But there are many other things that are actually starting to emerge. We also have data jurisdictional or data residency issues. And this is becoming more and more important as the world is becoming a little bit more polarized from a macro political point of view. So again, there's some results are that regulators and compliance officers require more transparency, and they require it in real time, the data in real time. The other issue that we see is we look at technology management. We've said before, managing legacy infrastructure and trying to actually join this legacy infrastructure together by connecting it better through API layers, etc., is really, really hard. In some cases, a lot of systems are basically past their use-by date and need to be actually replaced. But they don't need to be replaced by like systems. They should be imagined in a way that is open and allows for the digitization flow and workflow and automation of that workflow to execute based on the code that is delivered, not the people having to interface with the actual systems. So better software and tools is really important. Modernizing that infrastructure is absolutely an imperative and a reality going forward. And many corporations are going to have to look at this. So jumping from doing something incrementally to doing something a little bit more visionary is going to become a necessity and no longer going to be a risk. In fact, the risk is going to reverse. If you do something incrementally, the risk is that you're never going to catch up and your competitors are going to be way ahead of you in the future. So therefore, the risk of doing something really small and iterative is going to be much higher than doing something that is more transformational to move to a truly digital environment. And of course, the last thing which is really important to us is cyber risk. We believe that having centralized databases, third-party intermediaries that can intermediate the data and provide services to you adds tremendous risk. It gives a central point of hacking, central point of data loss. In many respects, is not going to work in a real, truly integrated digital environment in the future. Our future is really, if you like, decentralized networks that are driven by blockchain technology, whereby the ability for somebody to hack a system and to get access to a lot of data becomes harder and harder to achieve. So again, just really quickly, corporates and treasurers' views on emerging digital environment. If we look at, just took some takeaways from the Deloitte study that was done. There's still a high level of trust with corporates and their banks, and we believe that trust can actually be amplified and can continue. But banks need to move faster into a more digitally connected environment, which actually assists the corporates. We also, we believe that more and more corporates, as we can see, are interested in using new digital channels, right? However, there are a lot of differences between the different digital channels. Do I employ an intermediary that does the work on my behalf, or am I capable of running the technology and consuming technology which doesn't rely on intermediaries and the risk of data leakage and trusted information leakage? So we believe the role of the bank is still incredibly important as a sole trusted advisor, but it is somewhat eroding because of the advent of fintechs. And this doesn't necessarily need to be the case as we move into the future. The corporates, CFOs, if they talk to us, they look at things like, the balance of technology advancements and personal interaction. How do they fit? So moving from an environment where I'm really dealing with exceptions, I'm dealing with things that people need to deal with because they're outside of the contract logic, which is executing across a network, for example. They need to look at things that are more agile, flexible, and they can respond to industry needs and industry requirements. And again, nothing has amplified this more than what has happened in the last 6 months. And more importantly, they need to run their business 24/7 in a digital and proactive way. So to be able to support that in a low-cost environment with a high productivity output is something that we believe a truly digital environment for interaction between your supply chain and your customers in the future delivers. Obviously, the impact on the banks is actually quite considerable. The relationship manager era is really, in many cases, over. It's really about how you work with how a bank will work with their customer in this environment, how they will deliver the technology and the experiences and the knowledge to get to them the right information, the right services in a way that supports their business going forward. And a data-enhanced senior banker working along with an agile team is what the relationship manager is going to transition to. Winning the trust battles, the adoption of zero manual interaction model is really important. Elimination of low-value intermediaries, as explained before, is really important. All interactions between trading partners, banking partners, based on a private and secure trusted network is what the DLT, distributed ledger technology, or blockchain will and is delivering. If we look at pain points the corporates, there is actually a divergence when this survey was done by BCG, and they were looking at what's the bank's view and what is the corporate's view. In many cases, they do actually align, right? They do align from the extremely high value. But a couple of things to call out here, which are quite interesting, is the bank's view still is nowhere near as important, or sorry, the same as a corporate's view when it comes to paper-based or manual documentation. There is an awful lot of financial institutions globally that still rely on paper, and paper at the end of the day is not a trusted format for the delivery of information. The corporate's view is very clear that the value of delivering a digital experience, right, is really important to them. The limited connectivity between partners is another thing that we look. A bank is saying, well, actually, you know, it's not really, it's not as valuable, not that valuable, right? Not all banks, obviously, ones that are involved in global trade see it in a very different way. But when we move to the corporate, the connectivity is very important to them, actually significantly important. So again, there is this divergence between sometimes a bank's view and a corporate's view, but generally at the end of the day, a number of these are aligned. You know, if we move to the biggest pain point for banks, right? You know, the connectivity, it actually kind of fits the reverse of what we saw before, because the connectivity between parties is really important. That is going to drive costs down. It's going to give a better source of data and a greater opportunity to provide services, whether they be financing services or transactional services. The high operational costs is really important that this is driven down. And again, to drive down high operational costs means that you've really got to do less. You've got to do a lot more with a lot less. And technology driving that is really important. Technology driving it in a way that really reduces the number of errors, the number of human intervention, the amount of human intervention that's required is really important. So you can actually move a lot of staff to really high value areas for customer interaction, high value areas for mitigating and remediating any exceptions that handle, and developing new services that could be delivered in this digital environment, right? So, and then again, you know, again, the moving down to things like the complexity of KYC and compliance is really critical to a bank. Over 78% are basically looking at an environment where they need to do know your customer. They need to be able to have know your customer processes that are real-time, consistent, not just once every month or once every quarter, but are actually really happening in real time. And this needs to then translate into compliance reporting and compliance visibility, whether it be internal or whether it actually be to external regulators. This will reduce their possibility of handling transactions which maybe should not have been handled and actually went through the system, resulting in significant fines and regulator issues. This will result in reduction in the cost of auditing, whether it be internal audits or external audits. So again, all of these things can affect cost, risk, and revenue. If we look at the rise of platforms right now, platforms have created an opportunity to actually reimagine business. So if we look at external platforms such as Amazon, what Amazon Web Services have done in delivering and positioning platforms, but platforms through social media, platforms through Amazon Marketplace, Alibaba, etc. So the rise of platforms really has mattered. But all of these platforms tend to be a single point of entry, centralized data, which is not necessarily the way a platform should be imagined for a bank and a corporate handling financial transactions. We need to look at open protocols. One of the great things about distributed ledger technology is that, and again, specifically Quarter, is that we can actually now look at what we call states or various stateless calls over the Quarter network, which basically is very akin to looking at something like, for example, in mail where you've used SMPT, right? So again, we can actually move to actually help the industry standardize on the messaging formats and actually make them, a little bit open to meet the needs of various industries or different counterparties. So there's a greater opportunity for open protocols to actually work in an environment such as using blockchain technology. Secondly, anybody that does this needs to be able to be open, needs to produce a design which allows for somebody else to build on a network by providing various microservices, providing a modular design, on-ramps, off-ramps to the network, which make a lot of sense. And obviously, the two last ones I'll just emphasize, which are massively important, is the ability to work on a cloud infrastructure that needs to be multi-cloud infrastructure, and it needs to be global, because we need to solve for data jurisdictional requirements of data. We need to be in a position where various countries are using, or the predominant cloud provider in one country is different to another. So working on a multi-cloud infrastructure and then using that to connect to cloud-based ERP systems and other cloud-based products which are today being delivered is really important. So the integration by, first of all, deploying on cloud technology and then integrating through to other tools and services that customers are actually working with is absolutely critical, and to do this seamlessly. And of course, all of the fundamental underpinning to this from our point of view is distributed ledger technology or blockchain. Let's go to how we use it. If we look at Marco Polo today, Marco Polo was founded in 2017 of leading financial institutions. SMBC was one of the leaders and founders of the network. It is large and it is growing. We have well over 30 financial institutions on the network today. We have numerous corporations that are on the network that have tested, that have transacted with pilots, etc. And as we go into live production right now, many of these corporates are transitioning from all those tests that have been done over the last 2 years as we've built out the network. The network is designed to have millions of participants on it. A participant being a business, whether it be an anchor corporate, anchor bank, or a small supplier, a small customer. The idea here is it's multi-bank, multi-product, multi-jurisdictional. The way if we look at this, it's really got three layers to it. It's got the Quarter infrastructure, the Quarter network, which is peer-to-peer permission communication between counterparties on the network. And we have the actual underlying platform. If you think of the underlying platform, that's like iOS or Android onto that actual network. The network being the GSM network, if I use the telecommunications industry as or mobile industry as a analogous for this. And then on top of that, we've got our modules and applications. So one of the things about Marco Polo is we will not be building every single application and module. In fact, we have companies now that we're in late stage negotiations to start building things such as insurance apps, logistics, etc. So this diagram down here really shows Marco Polo working with core banks, buyers and suppliers, and then providing a whole ecosystem of apps which can actually drive more and more value to the actual corporates going forward. As I said before, one of the most important things of this is the differentiation between a destination platform and a distributed network. A destination platform is a single point where all users, be it large corporates, their suppliers, etc., must log on to a central platform, and all data is shared and communicated on that central platform. The problem with that is that there is a single point of failure. There is reliance on that single platform. There is the integration, again, can be costly and often bespoke. There is also things such as data privacy, data custody, etc. So at the end of the day, we really don't think, and again, if you think about jurisdictional data residency, we really do not think that destination platforms really solve much at all going forward, although they have a purpose. If we move more towards the distributed platforms such as Marco Polo, Contour, etc., it's a distributed network. So everybody is their own participant on the network. Their data is theirs, and it's permissioned and shared with whatever counterparty is involved in the transaction. So this basically eliminates a vendor risk. It creates resilience because one node could go down, or one data center could go down for a few minutes, and the rest of the network has no effect whatsoever. It gives the control to the large corporate to work with very, very large counterparties where it's very, very sensitive data, down to very, very small participants, which basically the data is not necessarily sensitive, but it gives them a single point, a single way in which to communicate with their ecosystem. And the ecosystem, as I said before, can be very large. It can be many of their supply chain, many of their customers, many banks or financial institutions, port authorities, insurers, logistics providers, quality assurance companies such as SGS, companies like the Rainforest Alliance getting certificates, etc. All of these are and will be members of this ecosystem, but the connection is on a peer-to-peer trusted basis. What I see is what you see within this network. So again, just summarizing, as I'm about to run out of time, we have three big things that we focus on: privacy, scalability, and producing this in a way that we reduce the cost to the lowest point, so that the smallest participant, the one person supplier supplying janitorial or cleaning services, for example, could actually work on the network, send their invoices, and get paid or get early payment on the actual network itself. So we can go to the lowest possible participant. We can scale to many millions across every country, and we can provide a private way of interacting by using Quarter in a peer-to-peer permission network. Again, we leverage blockchain. We connect to all companies. Our mission is to make sure that it is available to any company, no matter how small or big they are. We can look at multiple funding through your banks. Again, this is just going to grow and grow and grow, not just because of the work we're doing, but because of the work some of our partners are doing. We're looking at a unified experience, so you're not logging in or running multiple applications. You can run applications to actually access multiple parts of your requirements, whether it be receivables discounting, asset-based lending, purchase order financing, etc. So again, to do this, we created three major themes. We created payment commitment, supplier pay, and receivables, and they focus on risk mitigation, purchase to pay, and the order to cash cycle. It's been successfully tested, and a number of very case studies, which you'll see in the material that we've actually sent before. So over 2 years developing and bringing where we can deliver it on a multi-cloud environment on Quarter, large and small corporates and banks in the banking community globally. The key areas that we've focused on are for both intersect corporate and bank. It was no good for us just to focus on a bank's requirement. We work very hard with our core banks that started Marco Polo, and we really started to focus more on what their corporates needed and how their corporates could work, but at the same time, how they would work into the bank. So we really drove the intersection between corporate and bank going forward. So that brings to an end my 30-minute presentation, and I thank you very much for the time to present to you, and please look out for the continued successes of Marco Polo Network over the coming months.
Mr. Barnes, thank you for your presentation. 今、バーン氏から発表をいただきましたように、我々 SMBC と最後にですね、ご説明いただきましたが、バーン氏のやられているマルコ・ポーロ社ではですね、一緒にユースケースもすでに三井物産さん、インドラマさんともやらせていただいておりまして、我々としてはぜひこのマルコ・ポロのプラットフォームを日本で広げたいというふうに考えておりますので、ぜひとも皆様でご興味があればいろいろとご質問といただければ今後いいかと思います。Thank you very much, Mr. Barnes. では次に最後となりますが、次の登壇者についてご案内させていただきます。次の登壇者はコントワール社の CEO でカール・ワグナー氏です。ワグナー氏はドイツェバンク、スタンダードチャータードバンク等でトランザクションバンキングに従事されまして、その後ブロックチェーン技術を開発する R3 社のアジアにおけるマネージングダイレクターを務められました。ワグナー氏はこの1月からはですね、こちらのコントワールのCEO に就任されまして、本日はコントワールプロジェクトについてのプレゼンを中心にしていただきたいと思います。そしたら、Mr. Wagner, is your slides ready?
Yes, can you see them?
Not quite yet. Yeah, we have them. So the floor is yours. Thank you.
Okay. Thank you, everyone, and thank you very much for this opportunity to present to you. It's always easier to be the last one in an event like this because all the esteemed speakers have well, it's easy and hard. It's easy because they've laid out all the groundwork, which we all believe in, that the opportunity is here for new technology to help banks and corporates be more efficient. It's hard because they've said all the things, so I have to try to focus on something else. But again, I've worked with SMBC and for many years is my time at R3, as well as with Mr. Barnes and Marco Polo. So it's nice to be in the group of friends here. So today I'm going to talk a little bit about Contour, and I'll start out talking a little bit about Contour, our journey to get here, and then I'll talk about similar ideas on our technology and how we're approaching a solution to help banks and corporates. So for Contour, our background is we're actually built by the banks for the banks. So Contour started as a project almost 3 years ago, where 8 banks came to R3 and asked to look at specifically letters of credit, and could they be made more efficient using blockchain technology, and more specifically Corda. And so these 8 banks came together. The heads of the trade finance departments came together and started scoping out what would be the best way to help corporates manage letters of credit. Now, letters of credit are not the majority of trade anymore. When I started in trade in the late 80s, it was 85, 90% of international trade was letter of credit. Now it's 15%. But it's still a large portion of trade, and it's the most paper intensive. So these 8 banks went through the process of setting up and asked the company to build the software called CryptoBlock. They built the software, and at the end of 2018, they started testing it. It was robust enough to test it. So 2018 to 2019, 15 tests were done. 15 live transactions. About half were intra-bank, so HSBC to HSBC, and then the other half were cross-bank, HSBC to BNP or Bangkok Bank or someone else. And the customers liked it. So the project, it was just a project, they had to decide what to do. And so the thought was, should we make this try to be like SWIFT? Should we be like IATA? Should we make it a for-profit company? And with the support of R3 and Bain, the decision was made it to make it a independent company. So out of some of the largest trade banks in the world invested in this company. So that included HSBC, Standard Chartered, ING, BNP, some smaller banks, SEB, Bangkok Bank, China Trust Bank, and also Citibank later joined as an investor in this new company. And the goal of this new company is to focus on LCs. And why LCs? Because LCs is a standard globally. Everyone manages a letter of credit in the same way. Doesn't matter whether you're in Tokyo, in Egypt, or Bangladesh, or London, everyone looks at letters of credit in the same way. And the goal of starting with this first product is to build the ecosystem. Just like Amazon started in the early days when everyone didn't dare to buy anything online, Amazon started selling what? They sold books, the simplest thing to sell, the most basic thing that everyone understood. You didn't have to worry about sizes or colors. It's a book. And they built the ecosystem, and then they added more products onto that. And that's the way we're looking at starting the first use case being letters of credit and building the ecosystem. Now, so we have in the ecosystem, we've already increased our banks. So you see more logos there than just 8. At the moment, we have 17 banks. By the end of the month, we should have 20 banks in doing live transactions and working on the system. But we have corporates, we have banks, we also have partners. And it goes to a little bit about what Robert said is that no one can build everything. Let's be honest. So working with partners is a way to offer other services to the system. So they could be order management partners at the beginning of a transaction. Maybe a buyer, seller use a marketplace to negotiate an order of iron ore. Well, on Shinsei, those data details are the ones you need for issuing an LC. So they go over and we integrate with Shinsei, we take the data, and it becomes an LC issuance, and it's a co-drafted LC issuance that goes from buyer and seller, then to buyer, to issuing bank, to negotiating bank, to the seller. This happens almost instantly with a transparency because you can see what's going on. So the partners are a big, important part, whether they're order management partners, data aggregation partners at the end of a transaction, or partners offering other services like SDocs or Bolero we're integrated with, who offer the digital bill of lading. So where we see ourselves in right now, I'll talk about the future, but this map shows where our current banks have committed to be in. It's over 30 countries next year. But this goes a little bit to what's spoken about before, a distributed trade network built on Corda, like Marco Polo. What we're doing is we're managing the communication between nodes to be safer, and also because of data residency laws and issues and trade wars. Right now, keeping a central database is problematic. So each member, whether a bank or a corporate, is permissioned, or partners, permission on the network. They have a node, and they can interact between them just for that transaction. So Contour is actually a communications protocol for allowing that workflow to work between the parties in a transaction. Why blockchain? It's been talked about before. A decentralized network, not only is there not risk in one location, all the data sitting in one location, but nowadays to have data in one location is difficult. No one wants all their data to sit in one country. And it's even for multinationals, they have that challenge. And being on a system where it's a DLT system is the opportunity to keep their nodes in different countries and still communicate. So we really need a network in order to network, right? So corporates are increasingly choosing a multi-bank trade platform because they want to manage their information cross banks. Interconnected network obviously has the benefits of one person doesn't have to connect to everyone. If you bilaterally connect to the Contour network, we can connect you to all the other players. And of course, digital wave and trade, talked about many times. Of course, COVID-19 making people realize that paper it's not only expensive, but it's a challenge. And when you can't physically move that paper, or you can't be in the office to manage that paper, then it's time to go digital. So one of our partners said that they usually work and they add 6 countries a year to do certificate of origins electronically. They went from 6 a year to 60 countries in 6 weeks, right? So the speed of digitalization is going much faster as more and more corporates and banks have to think about their digital strategy. So a benefit of Contour for a bank, a low-cost digital trade network to connect. You can connect, you can offer services that you couldn't offer before. There's a transparency in the system that a buyer and seller can see where their transaction is. It reduces phone calls. For instance, a discrepancy, we're told a discrepancy takes about 7 to 10 days for an amendment to an LC to happen. On Contour, we can get that done in an afternoon. So the ability to be on one platform, communicate, because when you think about it, right now, at the very best, usually there's 3 silos in a letter of credit. There's the buyer and the buyer's bank using one electronic banking system, seller and seller's bank, and the 2 banks using SWIFT in between. So by the ability to put all these players on one platform, that transparency is there, the workflow is there, you can see whose turn it is next, and it happens a lot quicker. So instead of, one of our customers said it's 7 days and 16 phone calls to manage an amendment, they can do it in an afternoon, no phone calls. So that's incredibly powerful for the sellers and the buyers to be able to communicate with their banks. So as I said, we work, the buyer and seller can digitally co-draft an LC. It's on one platform, they can amend it. The presentation on the platform can be done in several ways, because we also realize, and I'll have another slide on this, that digitalization is a journey. Not everyone can become digital tomorrow, even though they may want to. So on our system, we can take data, all structured data from partners, from corporates, from ERP systems. We can take an electronic data packet, which could be structured data and PDFs, which are electronic, or we could take a hybrid presentation where for some reasons, maybe someone is, because of a regulatory issue, they still have to have paper, or maybe because there's that specific partner hasn't got onto a platform like Bolero SDocs yet, they still need to issue a paper BL. Well, we can also take hybrid, because we realize it's a journey to move this, and we're trying to help move that journey from all paper to less paper, to then the goal would be all structured data that then can be managed more efficiently. Document checking could be done automatically, and a lot of other services could be added to it. What we don't do is we don't transfer funds, right? We're not involved in payments. We're managing the letter of credit process from beginning to end. We don't auto match all fields. We work with partners that will be offering that very soon. So that'll be a way to either pre-check or check documents. And we work on Corda. Corda doesn't have any cryptocurrency or Corda coin. We're a distributed ledger. We're a permission system. As I mentioned, the road to digitalization is a process, and first starting with trying to reduce the paper, and that's happening now in these COVID-19 times. We get customers on board, they learn, they can hook up with different partners to offer other services. The way our network is growing is buyers and sellers are asking other buyers and sellers to join, and they're asking their banks to join. And this is where this network effect, where there's encouragement to join the network, actually helps us sell and helps us expand it quite rapidly. At the moment, I sort of say we started out as Contour started out as a reverse startup. A startup usually starts as an idea, you go get funding, and then you build the software. Well, actually, the software was built in 2018 and 2019. We have the funding as we invested in by the 8 banks and 3 technology companies, and that was done at the end of 2019. What we didn't have was the company to roll it out, and this is what we're doing with the pre-production beta network right now. The beta network is available now until the end of September, and it's allowing corporates and banks to onboard, use the system free of charge, understand it, give us input on understanding it as well, and we're keeping adapting it to fit their needs. Now it's not one-offs anymore, it's continuous transactions that are going on. Same buyers and sellers are doing more than one transaction on the system, and buyers and sellers are asking others to join the system. In September, we'll be having the official production rollout 5.0. We'll have a full network agreement as well as the network agreement and the rule book, and that'll be able to go for scale. We'll be rolling out that over the next 3 months, so the last quarter of this year, and starting to charge in 2021. The reason that we're spending 3 months to do that is that almost any bank, to do a POC is pretty easy. To choose a software company to be their verified, certified vendor takes a little bit of time to go through the process, and that's what we're building now. We're building the technology, the security, the security protocol that banks can accept us as all the beta banks will be moving to be production members of the network and rolling out to do transactions in volume next year. So I wanted to stop here and thank everyone. I think it's a great panel, and obviously I think we're in violent agreement on many areas. It's not if digitalization, it's when, and if it's not when, it's actually not when, it's now, and the how, the technology, distributed ledger technology, blockchain technology is the tool that we've been missing to make this happen. I remember I worked at a company 20 years ago to try to digitalize trade finance. It was very difficult. It's a lot easier now because we do have the tools to do it. So thank you very much.
Thank you very much, Mr. Wegner, for that presentation. It was very interesting to hear about your digital journey and how this can really change the trade finance. Thank you. ただいまをもちましてですね、ウェグナーさんの、プレゼンテーションをもちまして、今回の、プレゼンテーションを終了したいと思いますが、本カンファレンスですね、発信される幅広い情報を通じて、業界の皆様、ビジネスの皆様においてですね、最先端の技術をブロックチェーンを用いて、使っていただけるというようなきっかけにぜひしていただきたいというふうに思っておりますので、まずスピーカーの皆様に厚く御礼を申し上げたいと思います。
So I would like to take this
拍手のほ
opportunity
ど
to
よろしくお
extend
願
our
いしま
deep
す。
appreciation to all the speakers. Please join me in a big round of applause.
また今回ですねご清聴いただいた方はオンプレの方々と、
Those of you who've
実際のネットでご清
listened
聴い
in,
ただいた
some
方
of you
いらっしゃ
are
ったと思います
on
が、
premise and some of you
こう
are
いう新
joining
しい時代の
online.
こういう形での形式になることですが、ぜひとも
This is
こういう
a
機会を
new
踏まえて
form in a
今
new
後もですね
And I hope that he will seize this kind of opportunity for us to be engaged in business going forward. And thank you all once again.
小野様ありがとうございました。スピーカーの皆様、そして進行役をお務めをいただきました小野様、改めてありがとうございます。では、これをもちまして、ブロックチェーン技術を活用した貿易金融リレープレゼンは終了とさせていただきます。続いてのセッションのご案内でございます。18時15分より開始いたします。まず、ホール A ではパネルディスカッション、ブロックチェーンの未来と変わる社会。そしてこちらのホール B ではパネルディスカッション、デジタル包摂による金融の未来、新興国におけるブロックチェーン活用への道と題しましてセッションをお届けいたします。オンライン視聴の皆様方、ご視聴いただくセッション会場の URL ご選択の上ご参加をお願いいたします。では次のセッションの開始の時間まで今しばらくお待ちください。
Please bear with us for a few more minutes before we start the next session. Thank you very much.